Tom Lee has emerged as probably the most visible, influential spokesperson in the entire Ethereum ecosystem in a matter of months, maybe a matter of weeks.
The crypto market is puking today. 150 billion liquidated from crypto markets in an hour. Just look at how ugly this chart is. So why is this happening and what's causing this absolute puke? 3 reasons. Number 1, the China-US trade war is ramping up. Number 2, the US government shutdown continues. Number 3, people selling to pay taxes. And then what else? Comment below this video why you think the market is puking. And understand this. Look at this. Just like back in April when markets puked, the best thing to do at this time was buy or hold.
From them. Buy it! Buy it!
The worst thing you could have done at this time was sell out of fear. People who bought this dip or held through this dip profited greatly. If you're new to the channel or need a reminder, here are 5 strong reasons why crypto will be up in the future, and this is a dip worth buying. Number 1, the crypto ETFs are booming. Number 2, Wall Street continues to tokenize. Number 3, digital asset treasury companies keep buying. Number 4, the government keeps printing and overspending. Number 5, we are in a declining rate cycle. It is such a mistake for new crypto investors to move to cash right now, to move to stable coins right now, thinking that this price will drop a lot lower in a bear market is just beginning. And I'm not here to say that it's not going to drop any lower because short-term market structure has been broken like this. I think it's very possible we see Bitcoin drop to low hundreds, maybe even high 90s. But 6 months from now, I think it's going to be higher. 12 months from now, I think it's going to be even higher. 18 months from now, I think it is going to be so much higher. Just in 11 trillion. Charles Schwab, one of the biggest names in traditional finance, has announced they will be offering spot Bitcoin and crypto trading in 2026. They're fully getting into crypto in 2026. Again, my friends, I don't think Bitcoin goes lower than 100 or even high 90s. This magic blue line is where Bitcoin starts its next big mega rally. Just like right here, just like right here, even just like right here. Even knowing taking a look at the Bitcoin having index price appreciation from each having this is us today. Look at how much we are underperforming. Look at how conservative the growth has been. This is actually a very healthy chart in my opinion, especially knowing that this is the cycle where institutions have really strongly begun to onboard. Just-in institutions now hold 10% of the ETH supply, 12.5 million ETH, or 10.3% of Ethereum's total supply. Their biggest share ever. Wall Street really isn't here. Institutions and Wall Street are not really adopting Bitcoin and crypto. And that thought could not be any farther from the truth. Open your eyes. This is Coinbase's head of institutional strategy. He explains perfectly the state of the market and Wall Street and institutions getting in right now. You will hear him say, this is a 10-year process that began around 2021, 2022, but institutions and Wall Street are 100% adopting Bitcoin, crypto, and tokenization because of meme coins. Listen to this.
There's 2 stories happening simultaneously, and they couldn't be further apart in tokenization. So the one is this sort of slow grinding move forward that institutions are realizing, hey, this is a better system for transferring and recording value. And you see it because, Larry Fink gets up and says everything's going to be tokenized. Every major exchange in the world, stock, commodity, whatnot, are looking into building tokenized trading systems because it's just better. And it takes a long, long time for these legacy systems to change because A, they work really well, and B, they're important. So I understand why it takes time. But if you talk to anybody who's thinking, who has more than a 10-year career at these institutions, they know that this is coming. On the flip side, you have the retail exposure to tokenization, which has largely come through this form of meme coin, which I think, generously, the most generous view of meme coins is they're somewhat frivolous. There are people who disagree with that, but I think the mainstream view is that. Now, here's the irony of all this. The reason the institutions are so confident that this value transfer mechanism is the future is because of these meme coins. Because despite being maybe perhaps frivolous, they have proven their resiliency. When you read about a meme coin going up and down $1 billion at 2 a.m. on a Friday night, that means billions of dollars of value has been transferred peer-to-peer across an infrastructure that is proving 99.99999% uptime, which is what you need to operate an exchange. So that's the ultimate irony, is the stuff that people are reading about and maybe making fun of is actually proving out the resiliency of this infrastructure so that institutions can feel comfortable using it. I'm not saying that meme coins themselves are giving institutional investors confidence. I'm saying that, look, the modern internet was tested on cat videos, right? That's what we sent to each other, right? So cat videos are frivolous, but sending cat videos proved, wow, these pipes work, the compression work, the playback works. So I think of meme coins as sort of cat videos testing out the early internet. I'm not judging people who want to participate in that ecosystem. I'm just saying that they're proving out the resiliency of the infrastructure.
So smash the like button and think about it like this. 95% of all Ethereum held by public companies was purchased in the past quarter alone. It is easy to forget just how new this all is. Over 4 million ETH purchased by corporates in just the last quarter. BlackRock Ethereum ETF now ranks number 15 out of 4,400 plus ETFs in the world, pulling in over 10 billion year to date. Over 1 trillion has flowed into ETFs this year, and Ethereum is rapidly capturing this capital. The message couldn't be any louder. Institutions aren't just buying crypto, they're buying Ethereum. It's clear the entire world wants more ETH. Take a look at what's happening around you. Even legend Michael Saylor is changing his tune, admitting this time is different. Just in, Michael Saylor in Washington, D.C. says, Tom Lee brings Ethereum credibility. The most visible, influential person in the entire Ethereum ecosystem in a matter of months, maybe even weeks. Listen for yourself.
Tom Lee has emerged as probably the most visible, influential spokesperson in the entire Ethereum ecosystem in a matter of months, maybe a matter of weeks. What does that represent? Well, first of all, they have $10 billion of capital. Second of all, Tom Lee is part of the Wall Street establishment. He was never part of the crypto establishment. You saw Wall Street merges with the crypto economy, capital flows because it trusts Tom Lee. And then the next thing you know, you have Tom Lee having conversations with the early Ethereum entrepreneurs, with the Vitaliks of the world, or, and the like. And what's interesting there is that entire movement becomes commercialized, institutionalized, legitimized, rationalized, becomes a bit older, a bit more credible.
So understand that the trend is in our favor. The trend is traveling up and to the right. It is a very bullish time for Bitcoin and crypto. And this is coming from a BlackRock executive himself saying, this is a global trend. I think we're going to continue to see tremendous momentum in digital asset ETFs. He talks about Bitcoin and Ethereum specifically. He says they're growing at a tremendous rate. This happened just today on CNBC. BlackRock US head of equity ETFs.
This is a global trend. We have seen a tremendous amount of ETF flows across the iShares business globally. We had a record-breaking first half of the year, record-breaking Q3 of this year. So this is happening globally.
Where do you see inflows going in Q4? As I mentioned, among your top 5, 2 are crypto ETFs. One's tied to Bitcoin, one's tied to Ether, as well as an actively managed ETF. And more broadly, it seems like investors are moving away from index funds. The SPY, for example, very popular S&P 500 ETF, actually seeing net outflows this year above $6 billion. Where do you think the money's going in ETFs going forward this quarter?
Well, I think we're going to continue to see tremendous momentum in digital asset ETFs. They're growing at a tremendous rate, and we're seeing a lot more accessibility to them through the approvals on certain financial platforms in the United States that open access to financial advisors to buy them.
Thank you for watching my video so far. Please watch my previous videos to stay up to date with the latest news in the crypto field. Please like, subscribe, and comment on how you see the future of crypto. See you in another video. Goodbye.